Hey, how's it going, guys? Oh, okay. Oh, cool. All right, guys. Welcome. Well, maybe StockTwit's little government side of things, right? Just trying to get back up and running, but it looks like we're good to go now. Yeah. So what a day. Got a fair amount that I want to yap at you guys before we get into it, but as always, the main idea or the main goal here is to answer your guys' questions. So make sure in chat as I'm waffling on here, you guys ask whatever it is you want to ask when it comes to the market. It's a very bifurcated market right now, so I think it'll be some interesting conversations about what's moving higher, what's moving lower. I forget to introduce myself every now and then, but my name is Michael Nauss. I'm a chartered market technician and a quant, right? So I look at the market from a very numbers heavy statistical side of things as opposed to having like a real, hardcore uh, look at the uh, just the charts. I want to see the math. I want to really know that it's not just a squiggly line, but the math kind of makes sense to me as well. So, but we'll look at our fair share of squiggly lines. Don't you worry. So, right off the bat, huge gap up today. I mean, obviously with the rumors, I guess, of the shutdown ending and senates and houses and all of that. I don't understand now. I'm Canadian, so I'll just say that right now. So I barely understand what's going on down there. I actually think it's an advantage more than anything because I don't have a dog in the fight. I don't have any biases when it comes to that. But I just want to kind of go over what this shutdown looks like and what the end of a shutdown looks like, more importantly, because we know what the beginning of a shutdown can look like, and then we can take a look at what the end of a shutdown looks like. And I have the chat open. I even have the YouTube chat there as well, so we should be good to kind of ask whatever questions you guys have. But in the meantime, let's just go through and we'll take a look here. So first of all, this kind of action. So if we zoom into just today, and that's actually we can do like a 30-minute chart of today, and you can see big push up, big sell off, right? Big push back up. So that leads with a doji. And just technical analysis 101. A doji is just fancy words because we use fancy words for everything. Of just saying we have opened or we are right now exactly where we opened. So there's been a little bit of an upper wick, a little bit of a lower wick, but we're right where we were when we got started. And the reason that that's significant and that's an interesting price action is it really just shows that the bulls tried a bit and then got pushed back down. The bears tried a bit and got pushed back up. And then between those things, we're kind of right where we open. And that makes sense. You think about it, a gap this big on news that is the only news that we really care about anymore, right? We got FOMC out of the way, we got most of the earnings out of the way, and the earnings were fine. FOMC is what we expected, and tariffs are closing or getting settled all across the board, and so the shutdown was like it was the elephant in the room. So now that it looks like that's at least taken care of for, I guess, 2 months. They've pushed it 2 months away, not solving the big thing, which is healthcare, which we'll take a look at in a second. The and we're just consolidating. It makes sense after that big of a move. This is where I know a lot of traders, a lot of short-term traders that I deal with, won't trade off gaps that are bigger than I think it's like a quarter of a percent because there's been some studies, there's been some work to say there is really not much intraday action to already be had. It's had. So think about it. If you were short on Friday, well, you're getting hosed right now, right? And you got to use every dip to buy. And if you were long on Friday, you're doing amazing, and you're probably using every rip to sell. And because right that two sides of the action are happening, the question remains: we're are we going to move anywhere? And it's kind of not, right? And it's so we're just chopping and we're just consolidating. And I wouldn't be surprised to see this for a number of days if the price action is literally, and I talked about, yeah, we'll definitely get to some squiggly lines. I wouldn't be shocked if the price action is literally this for like the next handful of days. Because sometimes you have these big gap ups like you saw here, then you just have sideways kind of action. So it wouldn't surprise me at all if that was it. The news is out. We had the big gap up. I think there's some votes and whatever going on, and that causes some wiggly bits. And then we have this whole conversation in, I believe, January, where the whole thing starts up all over again. It's exhausting, guys. Figure stuff out down there, please. Come on. But this is the main thing that I wanted to show you guys before we got started. So this is a tweet I put in that was pretty controversial at the beginning of the shutdown. I said, buy the government shutdown. A lot of people got mad. This time it's different, blah, blah, blah. And this was just showing the S&P performance during government shutdowns. You can see one of these was negative during 1990, and it was down 2%. The rest of them were positive, and this one right here was the last government shutdown under Trump, which was the longest one out there when you made a 10% return. So that's what happens during the government shutdown. So now that it looks like the shutdown may be getting close to an end, I ran the same math. Again, I'm a quant, so I'm a really heavy numbers guy. I just want to know what happens after a government shutdown. If when the government shuts down and that is bearish or bullish, then when the government opens back up, is that bearish? Well, looks like both are bullish. Again, there isn't a crazy amount. I wouldn't trade exclusively off this data because there's just not an insane amount of data here. Right? It's not like this is enough data for me to go, oh, this is definitely a trading strategy that one should be employing based off these number of handful of returns that you're seeing. I certainly don't believe that that's the case at all. But it's good to say, okay, what happened last time, right? Well, what happened last time? Well, in all cases, this is from the end of the shutdown. So when they opened up the government 1 month out. Right, the last chart was for the full shutdown, so some of them were longer, some were shorter, all that kind of stuff. But this is from after the shutdown, 1 month out, what happened. And so the last one was 5%, and then this was 0.5%, 3.5%, 1.8, 2.5. So let's say, I don't know, average 2% or so after the shutdown. That's bullish as well. So that's the main thing I wanted to look at, is that it seems like a shutdown is bullish, and then after shutdown, also bullish. So good. Now, I did go and I looked at those. I think it's important to take those numbers and then go and look at the charts. And they weren't just like screaming rip higher. They were slow kind of consolidation and slow trend higher. So I don't expect it to just be up every day after this. And of course, that amount of data could definitely be wrong because there's just not that many instances. But at least so far, it's certainly nothing to be worried about. Because that was my wonder, is saying, hey, okay, they shut down the market. That's bearish or bullish. So if they open it up, is that going to be bearish? But everything's bullish. Everything's bullish by stocks. STI, I don't think it's that STI because that's some sort of index. It's probably this STI. Solidin Technologies. So again, I'm reading your guys' questions. I see them all there. I rambled so that there's some in there. I will get to them, so no need to repost or anything like that. Just know I've seen them. I'm just going to go in kind of order as well. So this kind of, as soon as you get a gap up and a big run, I start to look at the VWAP from that gap up, which is around 20 bucks. That's a long way away. Again, this one is one that I think your job, I don't like this. I don't like that it was a $700 stock at some point. Means it's had to do some reverse split, but zooming in and just taking a look, it looks really close to what happened back here, where you had a gap up and then it pulled in and it held that gap for a while and then started to kind of coil higher, and then some either earnings or news or something popped us up here, and then the same thing happened. So you get a pretty easy line in the sand. Now, the problem I think you're having is that this is a 70% pullback from this high. Like, this is just one of those, it's an insane one. And it is insane because, is there a float? Yeah, there's only 2 million shares in the float, which is nuts, right? It's 2 million shares in the float is like nothing. It means the whole company is worth 2 million times 11, like 30 million. So this choppy, sloppy kind of action, um, you have to zoom out, right? Because a 70% pull down from highs feels horrible. And if you are in it from highs, I feel bad, but it feels horrible. But just note, looking at the price action, you have a pretty clear line in the sand. Seems like $10, there's someone buying. You got to $10 here. So this wick on this candle, this daily candle, means it opened up, it sold to $10, someone bought it. Came back to, again, $10, meaning 10.50, 9.50, right? Or $9, like zones. It's why you'll always see me draw my zones generally with these lines. One of my favorite technical analysis sayings is draw your lines with a crayon, not a pencil. Essentially just meaning they're not points, right? If someone says I like a stock at $10, they don't mean at $10 they like it, at $9.99 they hate it. They're zones. So when I say $10, I mean this kind of zone right here. If you're holding that zone on a closing basis, you're probably okay. If you lose that zone on a closing basis, you're probably going to have to reevaluate, and you could lose it and then retake it and all that kind of nonsense. But this is the power, I think, of technical analysis. As someone who's like a hybrid technician quant, I think I can more objectively sit back and say I where are the powers of both. And I believe the power of technical analysis is identifying zone trend and then zones like this. There has been in the past someone buying around $10. That doesn't mean they'll be back. We have no idea what it is. It could be someone who shorted up here and is covering. We have no idea how long they're there and what they're there for. We just know there is past interest in this. So in all trading endeavors, you have to draw a line in the sand. You absolutely have to. That's all it is. You sit there, you draw lines in the sand. And this $10, I think, is your line in the sand. Above that, good. Below that, might be time to go. Beta Technologies. Yeah, there's not enough, a new IPO, not enough data to do like a long-term technical analysis. What I do, and this is something I've just completely and utterly ripped from Brian Shannon, is the anchored VWAP from the IPO. It makes perfect sense to me. So what this purple line represents is everybody who has been buying from the IPO, where do they exist at? Where is their average price? If it IPO'd and you started to kind of dollar cost average in over time, they're roughly right here. And we know that institutions can and will fill order. Ken Griffin has testified in front of Congress that he uses zones like this to fill orders. And we're right there now. So again, this is a 30-minute chart. So we're talking really short term here. A simple idea for some of these systems or some of these IPOs can be, if you're above the anchored view up from the IPO, you stay long. And if you're below it, you get out. And there's some example here, right? So Figma, there's the anchored view up from the IPO. We were above it for a day. If you had gotten out as it broke, say because you liked it, you avoided all this. So there's Figma, and then we have the other example would be like CoreWeave. And then here's the anchored VWAP from the IPO. So say you took two shots at this, right? You liked it, you were above it, and then it broke down, you got out. You go, oh, that's a shame. Went all the way to like 30, and then it came back through, and you bought it again at 40, above the anchored VWAP, and it ripped to 180. So things like this, when it comes to IPOs or in general, they're just trying to do the basic thing that trend following does. And trend following does not predict action. It's not very good at it. Most trend followers have like 30% win rates. What trend following does a good job of is saying the thing is in an uptrend, I should own it. And then when it's no longer an uptrend, I should get out. And those outside winners of things, the rare instant where something trends for a long period of time, like a CoreWeave, can help you stay in it. So again, not enough data there, but it's something good to just kind of keep an eye on. Tesla is just annoying everyone right now. If you're a Tesla bear, you're annoyed. If you're a Tesla bull, you're annoyed. But that's okay, right? I look at Tesla and I just look at this high right here and then this low right here, and I say, this is just an insanely massive base. It's just a huge base on Tesla. And that's great. Because the old, again, another good technical analysis saying is just the bigger the base, the higher in space, which essentially just means that, when things get to base and kind of deal with themselves for a long period of time and chop about and kind of sort out their lives, then when they resolve from that base, there's there's been a whole bunch of people who had a whole long time to accumulate. And those people are going to wish for the success of and try to push this thing higher and all of that. So, you don't want stocks that just rip up forever. You don't want the stock that does this forever. So when it does, it either has to crash back down or it has to do this for a long time. This is a long base, right? This goes all the way back to 2021. And then if you compare that to like a Meta, this has been grinding higher. A Google, right? This thing's been ripping. A Microsoft. So of the Mag 7, we go back to the 2021 highs. Everything is well above the 2021 highs except Tesla, which is kind of right at the 2021 highs. So this looks great to me, and I've been saying it for a while. I think we could see a Tesla 1,000. I don't think that, a double from here is a surprise to anyone if that happens. But first, we have to deal with this small base. So we have a small base, and then that's at the high end of a large base. So if we can break the small base around 460, then we have a chance to break a large base. So I'm watching and I'm waiting for Tesla as well, and all I'm looking for is give me a candle close up here around 475 ish. I'll buy some as a breakout, and then if it fails, which I know that there's like a 50-50 chance or maybe even higher that fails, then I'll get out. Right? That's all there is to it. When it comes to trend following is the simplest way to trade and also the hardest way to trade. The simplest way to trade is because you're just buying things as they move higher. You're just looking for a price and you're saying, if it breaks that price, I'm in. It's the simplest way to trade. It is the hardest way to trade because you've got to do a couple things to trade breakouts or trend following successfully. One, you need to understand, like I explained to you, that most trend following systems, the greatest people in the world that have built trend following systems, are wrong more often than they're right. That is hard psychologically for a lot of people until you get used to it, until you get used to taking your trade and being utterly wrong a lot. Having a wife helps, I think, because you just used to being wrong. You're wrong all the time anyway. But you just have to hit the button. You got to be wrong half the time, and you just have to kind of accept that. And imagine that in any other aspect of trading or life. You're a dentist and you're just gonna pull the wrong tooth half the time, or you're a doctor and you're gonna misdiagnose someone half the time. It's very hard to do. And then the really hard part of trend following, I think, even more than that, because people can get used to, I'm going to take a paper cut every time I'm wrong over and over and over again. The real hard part then becomes holding when you're right. I think that's a massively hard part of trend following, even more so and dramatically more so than the other side of things. A lot of people have a very hard time in just doing nothing when they're making money and when things are going correctly. So that is what, if you're planning on buying this Tesla breakout, if you're a Tesla bull, more than anything, it's to have that plan, to have some way to stick with it when it's working, and then a way to exit it when it does not. And that is very easy just to say. It's very hard to do. I know some people will use indicators like the super trend, which is a really lame name, but this is just an ATR trailing, which just means it takes the highest point and it says, okay, the stock normally uses this much. I'm going to put that below it, and as long as that stays green, I'm going to stay in, or if I'm short, it's going to stay red. Just some sort of systematic way to say, if it's continuing to move up for me, I'm going to stay involved. The moment it stops, I have to get out. And again, those two parts are really, really hard, because what you do is you get some people that they can't do the first one very easily, where they can't stay in. So they're selling their winners all the time, and probably at the same time keeping their losers. So you're selling your winners, you're keeping your losers. You know it's not what you should do, but it's what you're doing. And right, you know it's not ideal. The other side of things is are people are then get like sycophantic, right? So they've held this stock that's ripped for them forever, and then when it comes time to exit, they don't get out. I won't name any names, but I do know some people. This CELH made them crap tons of money, right? They were buying CLH in 2020. So Celsius, I got one right here. They're fine. They're no better or worse than any other drink out there, in my opinion. But you bought this thing at 2, and then it rips 1,000% up to 30. You think you're great, and then eventually it kind of all falls apart here, and you never had a plan to get out. And then this could just be entering a big range forever. So it's the two of those. So right, Tesla, the entry for me becomes real simple. Give me a close above like 175 or 475, I'm in. The hard part is that exit side of things, right? NBIS. This is some semiconductor play. I think I know. I think I heard of this one, but this is just range bound. You know, this is it's a good looking chart, I will say, because of this, right? The weekly chart. It's taken this prior high, which is amazing. It took that prior high at 84 and just ripped through it. You can see I already have a line there, which means I probably did some analysis on this before. But it took that prior high and it just held on, which is exactly what you want to see. Now it's just consolidating. And anytime this NV makes me think it's a foreign company. So just be careful of that as well. It just means that the trading is done somewhere else. But we just have this nice consolidation here. And we're just getting tight. So you just take these highs and you combine them. You take these lows and you combine them. And things are just getting tight. So there's no decision for me to be made on something like this until this resolves to the upside or resolves to the downside. Now, I know that's a wide range. If you're a holder, that's 25%. It just fell from there to there. It just fell 25%, and then it rallied 14%. That's hard. I get that, but it's until it breaks either of those, I just don't see any potential decision at all to be made there. All right, sorry. I've had a very few trades come through. Again, I'm a systems trader, so my system just tells me when to take trades. And I thought I heard a ding that a trade was going to happen, but nothing. So I'm sitting here for a long time. Pfizer. Yeah, Pfizer is. I actually tried Pfizer on this breakout here. I think, no, this candle right here, and I got stopped out the next day. That wasn't fun, but it's going to happen. So Pfizer, this initial move right here was like the socialization of Pfizer, right? So we're getting government getting involved in this area, and then it's come all the way back down to retake it. So for me, as soon as a stock does a big round trip like that on what should be, in my opinion, very exciting news, you are getting the other one that I think of is Intel, that has just been going ever since. But Pfizer gets that same exciting news of it's caught the eye of the big guy, right? The big guy likes it. You got Trump very, very happy, very excited with Pfizer, and he wants to buy some of it so that they can make drugs and all of that. So they get that news, but then they can't hold on to it. To me, that is way more interesting and not something I want to play with anymore unless, you know, I can get back up to this kind of 25 area because it's just lost it. So just old man shouting old man sayings at you. The idea is never the news. As soon as the news is out, it's priced in, right? And one thing we can talk about healthcare a little if you want, but like UNH, right? Trump went on this mega tirade about how he's going to kill healthcare, and then UNH is like barely down on the day. It's inside yesterday's range. It's not really doing anything. Um, I know like Oscar is getting like murdered, but it's actually trying to bounce here. See, maybe if this thing goes green, that'll be hilarious. No, not green, but through yesterday's low, that'll be hilarious. But as soon as the news is put out there, everybody knows it, and it gets pretty quickly priced into the stock. So the question, I think, that's more important than the news is kind of the what's next after the news. And if you own a stock and bad news comes out, that's why I said like Oscar would be hilarious if it went positive today, because objectively bad news came out on it. So if you have a stock that has really bad news come out and it goes up or doesn't go down very far, then that's great. You know, that's something I think you can take and you can kind of, apply and say, okay, my stock had bad news and didn't go down very much. So think about what had to happen in order to have that happen, right? So someone had to not sell it, or other people had to buy it. And if they're buying the bad news, we know that large institutions need liquidity to get into and out of positions. So if they're buying the bad news and the stock dips and they buy it, then they really, really like it. They're using that liquidity to get in. Pfizer, I kind of see the opposite of that, in which it's ripping and it's ripping pretty high, and then they instantly use that liquidity to sell into it. And day after day after day, just down, 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 down. So the big guys, even with the government support, don't want anything to do with this. So me, I don't want anything to do with it either. APLD, Applied Digital. I've been watching this one. You can see I've highlighted this zone, which is just this prior high right here. Just a nice bull flag inside that zone. As long as we're not losing this level, this kind of $30-ish level, I think that's fine. It's, you can just draw this out, but this just looks like a big bull flag to me. Again, these ranges are huge because these are insanely speculative companies, right? If you just look at this on an absolute dollar basis, and you go like it's lost 25% of its value from its high. But I look at this and I say this is just a flag. Now, if we start to lose this purple zone, which again is nothing fancy, it's just the prior highs back here after its kind of initial 2021 run. If we lose that zone, then it's probably time to go. Otherwise, this is a bull flag. If you can end up breaking the top of these bull flags, that I think is a push up there as well. Tune. This company is probably going bankrupt. It's an awful company. Yeah, it used to be. Right. So $100 down to 66 cents and can't get going. They spelled cartoon wrong with a K. Good luck. Right, it's got earnings tomorrow, but yeah, hemorrhaging money, barely able to stay a buck. Remember, a dollar is important not just because of some sort of psychological level. A dollar is important because if you cannot stay above a dollar, you have to do a bunch of financial shenanigans to get above a dollar, or you get delisted. So not something that I'd be interested in looking at all. BlackBerry is a sore. Did you bring BlackBerry to the Canadian on purpose? This is a sore topic for us guys. You have to be very careful. This makes us sad as Canadians because we were kings of the world here on the cell phone for a second. We ran it all, and then we gave it all away. So I know BlackBerry is I think it's like a cybersecurity company now. It doesn't even really care about phones anymore. So but just a nice tight base here, right? You got this lower trend line that every time it hits, it rallies over and over and over again. It's like one of the stock twits things I put out the other day was just about this MindMed trend line, how insane this MindMed trend line has been. Kind of the same with BlackBerry. It's got this pretty wild trend line that every time it hits, it bounces over and over and over again. So I just say, hey, can it get above and hold above five? Five is five is one of those. So one is an important level, right? Because again, if you can't stay above one, you've got to do a whole bunch of financial shenanigans in order to stay listed. Right? That's a big deal. Then also five is another important level because there's a lot of institutions out there that just have a mandate where they cannot buy stocks under $5. And also, there's some margin requirements when it comes to margin trading in some brokerage accounts where you can't apply margin to a stock under $5. So those things together can become pretty problematic, right? So the yeah, this you need above $5 could be very important. So close above $5 could start a little bit of a wave higher, and that could get you some sort of institutional involvement, things like that. Again, $5 is a pretty important price. Again, not just because it's a psychological level, there's some, mechanics behind it. Poet. That's the monthly chart. It's done nothing forever, and then the daily's done pretty much nothing forever. So I know these are huge ranges. It's basically lost 99% of its value and then got most of that value back that it's lost. But I look at this and I say this is just very range bound. Things that sell off into earnings, I think, are a little bit more interesting to the long side than things that rally into earnings. I don't have a ton of data to back that up. I actually don't have any data to back that up. That could be an interesting thing to take a look at overall. I think that could be an interesting look. Yeah, so it's not like I can back that up and say yes. If things rally into earnings, they're less interesting than if they sell off. But the fact that it's selling off a bit, that's like ugliness is being priced in. Which back to the healthcare topic, I look at this and I say, okay, it's UNH has just been kind of getting crushed here, and then Trump comes out and says, I hate the ACA, which I'm not American, I don't know, but I think he's hated it for years. So bad news already priced in, then it's one of those scenarios where it's like, okay, all you have to do is not suck and you'll be fine. And I think that's what we're seeing with United Health today and a lot of healthcare stocks. If you actually look at XLV, it's up on the day. Right. So it's actually strong today. And I think you're just seeing that as saying, okay, yeah, so everyone knows he hates healthcare. And we know that the battle for Washington right now is about healthcare. So it shouldn't surprise us. Now, if we were ripping into the shutdown, then I could see more of a big reaction lower. TMF. TMF, again, never do your analysis on the leveraged security. So for those who don't know, TMF is just leveraged TLT. Right? The reason for it is so if we switch back and forth, if we go TMF, we go TLT, it's not like super dramatic, but you can kind of see it, that the charts are different. And the reason the charts are different is because the leverage products degrade over time. 2x leveraged, not nearly as much. 3x leveraged, quite a bit more. 5x leverage is coming out. Who knows? It could be insane one way or another for 5x leverage. So just make sure you do your analysis on whatever the actual underlying security is. And then if you want to trade the leverage one, go right ahead. I'm all about trading leverage securities as long as you're not doing it to go crazy. Like if you look at something that's 3 times leverage, you don't say, hey, I can take on 3 times the risk. I look at it more as I can apply 1/3 the capital and get the same return. Right? As long as you're using it to spread yourself out, I think it makes sense. But just know they'll degrade over time. They will move lower over time, even if the instrument stays flat, just because of that they're using derivatives that degrade over time. And bonds are interesting here. They're well off their lows. A super long-term chart on bonds. Maybe a trend line break is going to start, and we're going to see rates really come down. And again, for those who just don't know, for bonds to move higher, rates need to move lower, and vice versa. Right? You need interest rates to move lower in order for bonds to move higher. It's just kind of the way it works, right? You're getting paid in this rate. You need to make sure these things make sense. Again, I hope all that makes sense. But yeah, so I'm just watching this trend line on bonds, which is kind of right up here. Now, I don't know what to make of the fact that more economic certainty should be on the way with the reopening of the government, and bonds are actually down a little bit today. You would think safe haven asset, if you're worried about the government shutting down again, which might be the problem here, is they're thinking that they're not going to solve the healthcare thing before the next lockdown or the next shutdown, then um, the this could be just pricing in, because you wouldn't want to hold bonds if the government's the problem. I mean, if the government's the underlying problem, you don't want to hold treasury yields. You probably want to hold gold. It's probably why gold and silver are just killing it today. Just huge days in gold and silver. It's because if I'm going to put my money somewhere and I'm thinking the government is the problem, I'm going to pick gold or I'm going to pick Bitcoin. Those are the two places I'm going to shuttle my money to hide them away. Uber. Uber. Uber's holding really, really strong here. Earnings were great. You can see all these green up arrows down here. Just means they've been beating earnings over and over and over. This is a great looking chart. If it ever gets to this $100 breakout, there seems to be clear. You don't need to be a CMT just to see the clear resistance at like $100 on Uber. Hits 100, falls back. Hits 100, falls back. Hits 100, falls back, over and over and over again. So if it gets back to 100 and pushes through, that's great. I don't think there's anything wrong with maybe starting. If you want to get a position, you start a position down here and then just see if these lows hold, and then maybe you start to add if it breaks. That's kind of where I'm looking at Uber. I think I've actually just convinced myself to do that trade. I do that a lot, where if we're at support, I know the odds are that it's going to wiggle around the support and try to shake me out. So maybe I'll take 1/3 of my position here. And then if it wiggles me out a couple times, okay, it's a tiny position, right? If I wanted to buy $10,000 worth, I'll buy $3,000 worth in this zone. And then if it gets through these highs, then it's when you kind of step on the gas and you say, okay, things look like they're going. So maybe if it pops up here and then it consolidates for a bit, you buy a little more. And then if it starts to break out, you get a full position. I don't think there's anything wrong with stuff like that. But it's a great looking chart. If it can hold that base stocks basing at highs, good. These stocks that are used to be $1 million stocks that are tanking down to zero, not for me. And I hope they work. I really do. I hope everyone here makes a crap ton of money. I certainly have nothing that that makes me say I want you to lose money. So just have at it, right? Make a butt ton. But I just can't buy stocks that are just getting hammered like that. It just doesn't interest me, because I've read, I told you I'm a quant first and then kind of a technician second, and I have read just so many different studies about how stocks that are beaten up remain beaten up, and stocks that trend higher generally remain to trend higher. This Ver is weird. This little gap up, chilled for a couple days, gap right back down. And therapeutics companies are weird. I would just watch this $31 area. If it gets there, it's got to get through that if that's going to happen. It's got to push through that. AMKR, and start moving a little faster just because you guys are doing a good job asking questions. I love it when there's a bunch of questions here. It just makes my life easier. Great trend, right? A lot of these green arrows. Again, I'm no fundamental analyst, but if I see a bunch of green arrows like this, it means that they are just beating revenue over and over and over again. And you can see the trend is reflecting the fact that they're making more money than people thought they would. Both of those things are obviously good things, right? You want the company to make a lot of money and you want it to make more money than people thought they would. So we're seeing both of those things kind of happen at the same time, which is amazing. And then now it's gapped up and it's just inside, right? I know people who trade the strat just call this the mother bar. And this is how I would look at this. Wake me up when this thing either breaks and closes below the low of that bar or above the high of that bar. Because I don't know what happened on this day. It was likely a news event, but there's a lot of emotion on this particular day right here. And if we can't get through either of those sides, we're like what we're doing right here, this consolidation, there's just no new action to be gleaned. So through the high or through the low, that's like 30, 34, and 38. Deck. Yeah, deck, solid breakdown here on deck. Even though it's beating earnings, it just really can't get going. It just stock split here, but yeah, it just can't. I look at this and say, if it came back and quickly retook this support, that'd be very interesting to me. So a lot of people probably bailed on this position under this level. A lot of people probably shorted under this level, but unless it can kind of get back through and hold strong and push higher, if it's under this zone, it's a no-go for me until enough price action has gone by that there's more of that. Because this last thing, a lot of people bought right here, bought against that level, and it rallied up, and then they disappointed in earnings. They beat earnings, but they disappointed in things that they said, which is the most important. So, deck BMNR. So BMNR, you got to look at Ethereum, and Ethereum for some reason has been giving it back today. If you look at Bitcoin, right, Bitcoin is up today. Even if you look at Solana, Solana's up today, but then Ethereum is down on the day. So that explains why BMNR is trying to give it back. It's attempting to give it back, but a big gap up here. So really it's an Ethereum play. But I look at it and I say they're doing the same thing that MicroStrategy has been doing, and MicroStrategy is crap. MicroStrategy is down 48% from this high right here. And from all-time highs, it's down 57%. Then you look at Bitcoin, and Bitcoin's down 16%. So it's like, geez, I just don't get it. I don't know why I'd be interested in one of those things versus the other. Like, why would I trade? Why not just trade the instrument? And same with BMNR. If you really like Ethereum, which is all he's trying to do, is Ethereum, well, just buy Ethereum. And if you want, right, Ethereum, you could buy. There's a bunch of ETFs out there. There's ETHA, which I think is a pure play Ethereum. There's ETHU if you want to be a degen. This is double leveraged Ethereum ETF. So there's ways to get not only the instrument, but there's ways to get leveraged versions of the instrument. So I personally don't foresee, I don't understand the need for a treasury company myself. And maybe I'm just a boomer and I don't understand. These things are going to be great and they're going to rip forever. Maybe. I don't get it personally. That's just me. ET, energy transfers. It's a huge, huge range in here, missing earnings. This is a slow burner. This is what this does, right? If you're playing these things, you're generally playing them for like the dividends, and you're playing them for the safety. You're not even playing them for the capital appreciation on things like energy transfers. So I think, right, this is the April low, hasn't really bounced off the April low, so it hasn't really moved at all, which it kind of really shouldn't. You're just trying to collect your dividend and move on with your day. If you're trying to take a play off it, you can. They don't, right, from here to here. That's only like 10%. These things don't move very much. So you could, and then maybe just lean off this low. Looks like there's some buying going on kind of in this $16 area. There's nothing wrong with taking that and saying, okay, if there's If there's buying going on in this zone, then that's a good thing, and just taking that trade, but very, very slow. CTM, yeah, this is, I already drew. That's why I don't like wedges and stuff nearly as much as just horizontal support and resistance. I'll take it over any trend line or anything any day, because at least horizontal support and resistance makes sense to me. There's some people are buying it here and they're selling it there. So if it comes down here and you want to buy it, great. If it comes up here, you want to sell it, great. But again, that dollar, remember, it has to stay above. Go look up the rules. I don't know exactly. Has to stay above a dollar for a certain period of time consecutively, or it gets yanked off the exchanges. This is not what you want to do. So if it breaks above 160, you want to take momentum trade, sure. If it continues to hold at 88, you want to take a shot there, that's fine. But right now we're just in the middle of the range here. Reddit. Reddit's looking good. Nice little orderly pullback, still hanging out near highs. Again, I know these ranges are huge, but these are just these companies that are gonna have huge ranges. But yeah, look at this as kind of a bull flag. It's found support at this gap. So this was a surprise earnings gap where they go, oh yeah, look at that shock of an earnings gap. Let's buy that. So it found support there. I think that's important. So now it's just that's my zone. Like 175. We hold 175. I'm good. If it leaves 175, I'm out. PDYN. Paladine. You see, I already have this marked up because I probably has asked this before. Just nothing, right? Wake me up at the low of the range, wake me up the high of the range. There's nothing to do in the middle of a range. And that's where most people, I think, actually get into more trouble than even buying stocks that go down, because a lot of people will have stop losses in place. And same with this thing, right? Low end of the range and high end of the range, right? So if you think it's going to bounce off the low end of the range, it looks like this is your area. You want to take a little shot here and you can put a small stop loss in. But until it breaks out of the high, it's not really good momentum type play. Outlet, full disclosure, I own Outlet. I'll always, right, if someone's going to ask that, I always bring it up if I have some of the thing they're talking about. And the reason I own it is because it had this base forever, and then it broke out of this base, and now it's been putting in this base, and I'm looking forward to break out of this base as well, with an ultimate target, just kind of right up here at this 21 area where it broke down from. So just FYI, I'm in this trade. I know it has earnings soon too, but holding pretty high in the high end of this range. Beyond Meat, that's still a company. Yeah. Uh, I don't know. I don't know what to say with these stuff, right? It's everything is happening faster. GME, it was up there for a couple days, and AMC, it was at least up there for a couple days. With Bed Bath and Beyond, or with Beyond Meat, you got 2 days, and then it just kind of completely fell apart. So I don't think that this thing's going anywhere. Um, I I think the ability to have these movements that happen with GameStop are kind of over, because everyone who got involved, especially with AMC and all these other names, they got killed. So you can't get I was there. I was there for the GameStop thing. It was like a movement. It was on all the news. You couldn't walk anywhere. I had friends calling me. It was a whole giant thing. And then everything from then on has been just middling versions of the same thing. So if you're buying this because of you think that they're going to turn the company around, that's one thing. Good for you. If you're buying it because it was like this kind of meme mania cult thing, I don't think they have the power anymore. We could put it that way. I just don't personally. GPUS hyperscaler bankrupt and looks like a scam. So be very very careful with this guy. Right, this is saying that this was $1 billion a share. 1, 2, 3, 4, 6, 7, 8, 9. Yeah, $1 billion a share at some point, and now it's 36 cents. That's an easy way to spot a scam. Is if your stock was ever $1 billion a share, probably don't be in it. USAR. I know these rare earths are coming back. I do like the look of this one just because it's got a clear zone here that's been hanging out for some time. Right? It's a wide zone, but say 18, $19. High here, a high back there, a high here again. That $18, $19 area seems important to me. So if it can kind of dig in here and start to push higher, maybe it can grind back up over time. I think this is selling off more with the fact that the more kind of buddy everything gets with China, the less of a overall deal it is to have these kind of investments for the country in things like USAR. So that's one thing that I'm just like, hey, yeah, we're just kind of hanging out, right? Yeah, it's got to get over that. BYRN. Brana Technologies. Yeah, another base. Another just choppy at the low end of the base. Even though they beat on earnings, it got kind of woodshedded after that. Aerospace and defense. Very quickly, I'd want to see this above this kind of 1880 to 19, or it's looking like this thing's just kind of broke down under that support. And then the next support's all the way down here at 13. CRML. CRML, Critical Metals Corp. Huge resistance, kind of right in this zone. This is I think it's another one of those rare earth ones. Breakout and then retest. They're all going to move the same. You're going to have a lot of these rare earth companies that are going to move up or down together, just kind of how algorithm works. So they're going to move together. So if you do analysis on USAR, it's going to move roughly with HIMS. So HIMS is holding on to this support by like the skin of its teeth. It's using kind of everything it has, everything it can to just stay on this support at 41.66. Again, I don't understand the whole medical system down there. I don't get it personally. However, it seems like this is important. So you want to pay attention to the fights that are going on over the whole medical side of things. And right, you obviously want those things to go well. And if they go well, then great. You can have HIMS hold on and push higher, and you've got actually a cool little entry here. If the fight for the medical stuff that's going on in the States right now, if that looks badly, then this thing could kind of get way. But short-term basis, there seems to be 3 bottoming tails in this area right here. So every time we've come down to this under this $40, at least for now, there appears to be somebody buying. And those are patterns that I like, because that is, especially when you look at them as zones and not point in times, that's how algorithms work, right? You'll build an algorithm for entering an order, and you'll say, okay, I want HIMS under $40. That doesn't mean that they're just going to sit there and they're going to put a giant bid out at $40, because that would be very easily detectable and people would front run it. So these algorithms, what they'll do is if they say, hey, I like it under $40, is as it gets under $40, it will kind of randomly send out orders to buy. And that creates these wicks and movements around these prices, because if you're just randomly sending orders to buy, then eventually you're going to overwhelm the demand in that area. But yeah, holding again for now. CURI. Yeah, so this one broke down under this area, trying to bounce and then failing here pretty well. Curiosity stream, whatever a curiosity stream is. It doesn't look ideal, but it is breaking down here as well. EOSE. Nice breakout here. This one's been strong. Very, very strong company. Since its lows has just been just an absolute monster. Up 3,000. Yeah, 3,000%. And now we have this nice downtrend that's resolving higher. We had yesterday or Friday a big push, closed at highs on strong volume, and it's continuing today. So this is a good overall look here. SNDK. Yeah, there's no technical analysis to do on this guy. It's just ripping. Man, just huge like push up. So I think you just kind of take something like this, and if you own it, you put some sort of trailing stop on it. A moving average, something like that makes perfect sense. And you just try to hold on as long as you possibly can. But yeah, that's a great look on SNDK. Cold, COLD. There's not much analysis to do here. You're at all-time lows and you're hitting all-time lows. The just, and from someone who's a math guy and you look at the literature, buying new all-time highs works way better in the long run than buying new all-time lows, because things just, if they hit a new all-time low, it's likely for a reason, and they're likely to continue to hit those new all-time lows. So again, just be very careful of something hitting a new all-time lows. Don't look at it and say the dividend yield is amazing, so I'm going to buy it here, because the dividend yield will follow price. If the price continues lower and lower, they will cut that yield. It's why, like most dividend investors, they're not looking for the highest yield possible, because often the highest yield possible means that the company is having problems. They're looking for like a middle ground between yield and price. So a stable price and a decent yield, as opposed to a really high yield and a price that's falling apart. Kodak, still a company. Holy, look at that. That's very interesting. That's a very interesting look there in Kodak. I know they're not just doing like Polaroid picture things anymore. They're like vaccines or something now. But yeah, so you have this huge base for a very long time, and now we're breaking out of that base strongly. That is a nice looking long term chart. Now your stop has to be like in the fives, so that's, you're risking a lot on this particular trade, but that is a nice overall kind of lower base. It's a nice overall look. All right, last but not least, Nokia, and then we'll take a quick look at the market, see what's going on there, and then we'll call it a day, gentlemen. This is another one that is like an open AI deal that happened here. Problem with trading these things, just FYI, is that if you trade something that is domiciled somewhere else, you have to realize that all of the trading action will generally take place over there. So be very okay and very used to gaps, because they will occur all the time. You just look at these candles, it's gap and go nowhere, gap and go nowhere, gap and go nowhere. It's not a bad thing, especially if you're a long-term holder. Just know that because everything's happening in, I think, Sweden for Nokia, Sweden, maybe, then right, you have these gaps that will always take place. So don't really do too much technical analysis on them other than long-term trends and things like that, because the trading that takes place in America is only like half valid, because you're just getting the closing price of whatever has taken place overseas. So quick look at the market. Right, we're hitting new highs of the day for the market, so everything is looking grand and lovely there. That's great. It's kind of exactly what you want to see. And just know that I don't expect a huge push higher. I don't expect a huge sell off lower. I expect just kind of sideways consolidation while we deal with this gap, and we kind of sort through this mess that we're trying to sort out here in this name, or in the market as a whole. So, all right, guys, as always, I appreciate everyone for coming by, and I appreciate everyone for giving your questions. The more questions you give, the faster this goes for me, and I love it. So thank you all for coming, and I will see you guys next week.